Good afternoon, everybody. Today is Thursday, April the 2nd, and I hope April is starting off well for you as well as it can be. Today's video, I'm going to go over a couple things. I'll try to make it as quick as possible for you so that you can get back to doing other things. But thank you so much for tuning in. My name is Jason Potter, owner and broker in charge of Grand Strand Coastal Realty here in Myrtle Beach, South Carolina, and servicing the Grand Strand. So what we're going to be talking about today is a couple updates regarding the Grand Strand area and different closures, also discussing and answering some of your questions. A lot of you have been writing in asking what are going to be the impact of this COVID-19 regarding tourism and real estate, as well as I'm going to be touching on something that most of you don't know what's going on, which is the mortgage industry and the changes that are occurring there, which actually is impacting the real estate market probably the most, rather than this slowdown that we're experiencing. So I'll jump right into it. First and foremost, I hope everybody watching this is healthy and safe and with loved ones. If you need anything, please reach out to me. Everybody knows I'm a giver. If you need anything, we're a family. We're going to get through this. And I just want everybody to stay healthy and happy, and most importantly, in good spirits up here. Just stay happy, as read books, read the Bible, watch encouraging posts, turn the news off, watch. Obviously, we got to stay updated with what we need to know, but I would encourage you to turn it off and don't let it play in the background. Put on some good music and enjoy life. I know that I've been being able to spend so much time with my children over the past 2 weeks, and I've learned very quickly to accept the things that I cannot change and to work hard on the things that I can. And right now I can't really change. I can't open up these restaurants, these hotels, the beaches. I can't make things happen faster than they're going to. So I'm enjoying the time with my family, and I'm seeking wisdom. I'm gaining knowledge for you so that when you're ready, you need to be ready, because when the gates are lifted, my goodness, I don't even know, this Grand Strand, we're planning for an amazing impact. A positive impact, the restaurants to be very busy, the resorts to be at 100% occupancy. We're going to have a full quarter's worth of real estate demand where people are going to have not been able to purchase, or the lenders were restricting them a little bit. Now they're going to loosen that regulation again, and we're going to see a flood of buyers. So we're just getting ready for that time, and until then we'll enjoy it with the family. So Grand Strand, the governor closed down the beach access points, the public access points to the beach this week, as well as the access points to the waterways. The joke now is it's kind of like you don't need a boat, just know somebody with a boat. So now you can't get to the beach, so you got to know somebody with a beach house to get in there. But a lot of the resorts, they still own their beach access, so people that are able to get into their second homes on the ocean front and visit those condos, or if you knew somebody at the resort, being able to access those points there. So there are still people on the beach, just a whole lot less. Same thing goes with the waterway. They closed down non-essential businesses, your haircut places, the spas, the gyms, bingos, whether you agree with it or not. That decision has been made. Just like whether you agree with it or not about the public beach access being closed, whether you agree with it or not, the decision's been made. So it is what it is, and eventually that'll all go back to normal. And I pray for those that are being financially impacted through all of this. I just got off an hour webinar with the National Association of Realtors and the South Carolina Association of Realtors. There are quite a bit of small business loans and money to be able to get, some of which is actually forgivable. And so I would encourage you to talk to your financial advisor, your CPA, or your local bank, and for those that are watching that are small business owners or independent contractors even, and are affected by this, go and talk to them. If you're currently watching this and in the process of refinancing, or if you are currently purchasing a home anywhere in the United States, you need to call your lender immediately. The biggest impact that we are seeing, we still have tons of demand for homes. In fact, I'm doing a lot of virtual tours for people. We have people that are in a position where they have to move. They've sold their homes, in addition to people that are still looking to retire and relocate. They're not able to come and see the homes physically, but we are getting as much information and video tours and things as possible. We even have the homeowners that are in the homes that we don't even represent, sending us extra pictures and videos so we can send it to our clients. So everybody's really working together, because they still want to sell their home, and we still have a lot of purchasers that want to purchase homes. But let me get back to the mortgage industry. What has taken place over the past week is just incredible, and not in a good way. A lot of the government-backed loans, VA and FHA, have raised their minimum credit scores. And don't think for a second they just picked a number out of a hat. They knew exactly what number to pick because they probably knew the average credit score of their applicants. Right now, it's very difficult for these service providers, these mortgage providers, mortgage brokers, and banks to sell these mortgages because a lot of people don't want to buy them right now. They want to see what's going to take place. So the money on the secondary market's drying up. And so they've raised that minimum increased credit score of what they will purchase and qualify. Just our team personally, we had 2 or 3 people last week that actually were denied that were already approved in the process of buying homes, but denied because of this COVID-19 and different adjustments and regulations taking place in the mortgage industry. Individual that was supposed to have employment here, but they can't even leave their state, denied. They don't have employment, they can't get a mortgage. Somebody was just laid off temporarily for just a couple weeks to see how this thing goes. Laid off, called HR, no loan. Individual looking for a FHA loan. The reason that they are pulling money, if you will, and not being able to lend so easily is because those are considered higher risk loans. And although we've been doing a lot of good things by having learned from what we did and the mistakes we made in 2008, they also know what not to do because of 2008. And because VA is 100% financing for most individuals and FHA is 96.5% financing, there's not a lot of cash up front. So they are making it a little bit more difficult to borrow that type of money. Conventional loans obviously are still in place. If you can find a lender like we have that is a direct seller to Fannie Mae and Freddie Mac, that's probably your best chance right now. I can't say that you can't get money at other places. Certainly we have other lenders we work with that are doing that as well, but it is a little bit more difficult for them and they'll be the first to admit it. But again, that'll all change and go back to normal. This is temporary stuff. Goodness gracious. So as far as our real estate market goes, I do not see I see a little bit of a slowdown, but I don't see a huge impact. In 2008, there was people, we almost had borrowed $1 trillion against our homes here in the United States to buy other bad debt. And that was the 3 years leading up to the financial crash in 2008. That's why the housing market tanked when we were in that recession. We've actually participated in 5 or 6 recessions over the past 40 years, all of which, but that 2008, had appreciating housing markets, appreciating. And so I don't see that changing here in our area, mainly because if you look back and if you study this, the 3 years leading up to today, there's only been about a little over $200 billion pulled from our homes here in the United States for lines of credit, and those have been to buy appreciating assets. So the biggest difference between now and 2008 was in 2008, everybody was over leveraged, getting money they shouldn't have gotten because of the lending. There were no lending restrictions. If you could fog a mirror up, you could get a loan if you had a pulse. And so now, over the past 10 years, lending restrictions have been so tight that if you have qualified for a mortgage, even if I don't care how well heeled you are, if you're watching this, you know it's been difficult. And that's a good thing, because if something happens like what's happening right now, you don't have people defaulting, they should have qualified. So it's actually not a bad thing. Also, there was a temporary stop on any foreclosures, evictions, utilities. So we have learned our lesson from what happened a little over 10 years ago. In fact, a lot of professionals and experts are actually equating this time frame to 9/11's time frame in 2001. Many of you remember people were afraid to go out. People were afraid to go to restaurants. The tourism industry took a huge beating. Airline industry took a huge beating. So that's exactly what's happening now. It's not that we're afraid to go out necessarily, as that we can't go out. Restaurants are closed, tourism is down, airlines are down, resorts are down. And so we actually experienced, I believe the numbers were around 4 or 5% appreciating that year in the household market. So I don't see our real estate market going down. I do see the mortgage industry restricting some of those individuals that may otherwise have closed over the next quarter simply because those brokers and banks are having a difficulty selling that note at the end of the month because not a lot of people are buying those different types of loans. But if you have good credit and good income, and you can prove all of that, and you're putting a couple bucks down, you should be okay, and you should still be able to qualify. Call a real estate broker, call us, call your lender. We'll put you in touch with the right people and make sure that process is as easy as possible for you. As I stated, we are here for you. I am daily on webinars, conference calls, Zoom calls, speaking to people. You never want to be the smartest person in the room, so we are seeking wisdom of others that have been here in these types of situations before us. Obviously, none of us have experienced anything like this COVID-19 with this virus, but there have been other financial hardships that this country has gone through over the last 30, 40, and 50 years. And we will get through it just like we've gotten through of all of them. And I got to be honest with you, if you look at the numbers, real estate always wins. Real estate 30 years ago versus the cost of real estate now, just real estate wins, and Grand Strand will win. We live in a place people want to be, and that will not change. If you're watching this and are considering purchasing a home, relocating, or investing here along the Grand Strand market, let's just start the conversation now so that we can be prepared and have the advantage. So when the gates are lifted, we are ready, and we will have the advantage over those individuals who start once they're allowed to. I want to start now so that we're ready and we can beat the rest of the market, because I promise you, I've been talking to other brokers, lenders, real estate attorneys, and they are very, very busy, and their pipeline is very full. You're going to have a huge pent-up demand, not a lot of inventory here in the area to begin with, and I want our clients to have the advantage. So call us. Stay healthy, everybody. I'll continue to do these video updates. I'll give you another one here in a couple days, or if anything changes that's a big impact, I'll let you know. Reach out to our office at 843-712-1903, or visit our website at grandstrandcoastalrealty.com. Be safe, everybody. Be happy. Call us if you need anything.